Hi traders, and welcome to the Technical Analysis Market Wrap on Friday the 29th of April. So we certainly saw some big moves this week on the currencies and some of the indices, as it did promise us last week that it would do. It broke some of those key levels, and we've certainly seen that volatility kick in. So we'll jump straight into the markets and see if we can identify any trades for today or early into next week. So we can see here on the Aussie USD, our starting point, we saw a very, very big sell-off all the way down to our level. I mean, 71 cents was our actual level that we wanted to aim for here, but it actually went down all the way to 70, nearly 50, I think it got to, or very close to. So, realistically, look, that's always going to, generally happen if you're going to get a really, really big move. It does overshoot the target a little bit. 71 is a very, very strong level. That, make no mistake, it's sitting there right now. You can see that there's a very, very strong support for it here. So even though it did shoot through, obviously it has come back and rebounded. Now, 70 cents is the real mark here. So I think that with a little bit more continued weakness, we will get to the 70 cent proper, but probably going to see maybe a little bit of a pullback from here. You can see that markets are starting to stabilize a little bit. So it wouldn't surprise me to see it bounce off this level here and maybe retrace a little bit back up to probably this key level here around 71.70. That's another little roll reversal zone there. You can see that that support line is through there. I'll put a horizontal marker there for us actually, so we know the areas that we're going to be looking for. So we're looking at around that level there. If it does come back, tests that level, and we see a bit of a change of trend on a smaller time frame, potentially a 1 hour or a 4 hour, we'd be probably looking for the shorting opportunities again. You can see even on the, it's been coming down in a very orderly fashion, although it looks extraordinarily sold off. You can see these peaks and troughs basically identical. You can see the moves are really, really smooth, and it's pulling back all to the same levels and selling off at the same levels as well. But you can see we're getting a little bit of a turnaround here, so it wouldn't surprise me to see a little mini scalp back up to this level here. You can potentially get 40 or 50 pips out of it if we get the roll reversal. But at that point, though, I'd be probably looking at maybe the continued short. You can see the weaknesses well and truly set in. It's going to take a lot to convince me otherwise. And what it's going to take now, because we've seen such a big move down, it's going to take a series of higher highs and higher lows on a daily time frame to actually convince us that it's going to go long from here. So, realistically, gone are the days when the 80 cent talk was gone. When it was all the way up here, everyone was thinking it was going to keep going up. It gave us the signs, and it certainly did the job for us. I'm very happy to see it down here because I'm sure a lot of you have got a lot of pips out of this. So let's see how it goes now. It is at support. There's no question about that. 71 is very, very strong. We'll maybe look for a bit of a scalp up to around this level here. And if we get that, then we look for a roll reversal on the way down, a series of lower highs, lower lows on a smaller time frame, and we'll start looking for those shorts. The flip side of that trade, of course, is the bust through here, makes a higher high, higher low sequence on a daily chart. Then we start looking for the long opportunities again, and that that's going to be back to that sort of 72.80, so a bit more movement up there and back up to the moving averages. But again, price has to do that. We certainly wouldn't anticipate that. All right, we'll go over to the US dollar CAD. This one's been our best friend as well. It's done all the things that we wanted it to do. It broke out of the zone. It's tested the overhead resistance now. You can see that it got basically to the level that we thought it would, 128.80. It really, really played the game this week, the market. It basically hit all the levels that we talked about. And this is no exception. It's always going to find resistance at this point. It doesn't mean that it's not going to break through at some point, but we can see here that it certainly has sold off a little bit. The US dollar strength has sort of weakened a little bit over the last little bit in the last session. So no real surprises here, but in saying that, the MACD is very, very strong still. Like even here on the daily, you can see the signal lines entering the histogram above the zero now. Like the histogram is well and truly above the zero. And we're also getting a 20-50 cross. So, whether it's this break now or whether it's a pullback down a little bit more and then a big thrust up to try and get into the 30s again or the 130s, that's, for the market to decide really, but I'll be playing both sides. I know I've certainly taken profits at these levels now because we knew that was our target, but I'd be looking probably for a bit of a pullback down to this level here, which is around that sort of 127.50 area. If we get a pullback down there and we see a smaller change of trend, like so a series of higher highs and higher lows on a smaller time frame, we'll probably attack it on the way up and see if we can't bust through that. Either way, it's going to give us a pretty reasonable range to actually scalp. Because obviously where your targets are, but when we do get a daily close above all of this noise, then we'll start looking higher into the 130. So definitely opportunities there. Failing that, of course, for this to go short or anything significantly short, it needs to do a series of lower highs and lower lows on a daily time frame. As you can see, it's a long way away from doing that at the moment. And I would probably like to see it below the 127 and basically underneath the moving averages to actually convince me that that's the case anyway. So I would be waiting more for the long opportunity here than the short, because I think it's going to present itself a hell of a lot quicker. All right, we'll move on over to the US dollar yen now. This one has just busted through. It's basically done all of the things that we needed to do. It basically flagged there, although that's not really a flag pole, it's certainly a flag formation, and really it's a technical price action that we're looking for. So as much as it's not a technical flag, it's certainly flag-like behavior, what it did over there for the past 5 or 6 days, and then it just basically busted straight through, and we're into the almost touching 131, which is hard to believe when it was trading back down here at 115 that this could be possible in such a short space of time. But there seems to be no stopping it and no end to the move on this. And when trades are doing this, it's complete. We expected it to stop at 119, and all it did was pause there and then continued on. So realistically, it's in almost uncharted territory for recent trading history for this one. So trying to pick the top is a pointless exercise in my mind. I think it's a dangerous game, and trying to join the trend knowing that we don't really know where the potential take profits are is a little bit of a problem. So for me, I would rather play the law of averages and wait for it to come back down and touch a significant point. You can see it hasn't even touched a 20 moving average, basically since way back on, the start of 22, really, like the start of March. This is how fast this move has been. Like, it doesn't seem all that long ago, and it wasn't all that long ago. It was actually in March that it was down here. So realistically, all we want to see now is a bit of a pullback down to a moving average, and then look for longing opportunities to the previous high, because then we've got a target to aim for. At the moment, we just haven't got a target to aim for. Then, of course, if it does break past the 20 moving average and makes a series of lower highs and lower lows on the daily, then we can start looking at shorting opportunities, basically all the way down to the key points. But tell you what, it's going to be, it looks like it's a long way away from that, at least a couple of weeks, because it's going to take a couple of weeks to form a series of lower highs and lower lows on a daily chart, obviously. So yeah, not a lot to trade here, unfortunately, unless you're trading the really, really small time frames and scalping the 1 hour and 15-minute charts on this one. So a big move, and yeah, continuing strength. It's very, very hard to see where it can stop, and very difficult to predict. So let's not even attempt it. All right, dollar index. The dollar index has just been a juggernaut as well. You can see that it just continued on. This is a weekly chart. This is a big chart. You can see we've had a massive week. We'll go to the daily to see the extent of that move. And yeah, once it broke parity, or parity to 100, once it breaks the even 100, you can just see that it's just stormed all the way up to nearly 104. Like, you got to the 103.80, the 80 zone kicked in again, as it always seems to do. When you see this again, it's one of those ones where, at least with this one, we do have some history in front of us that we can actually go to and say, you know what, we are at a recent, it's recent, it's back, it was back in February of 2020 that the dollar index was this high. So at least we've got a target there that we know that was extraordinarily strong resistance at that point. You can see we had a massive move up there, and it came back down basically the same week. So in a week's movement, it went all the way up, and it came all the way down about 5 or 6 100 points, effectively, is what it did. And, maybe, I'm not saying it's going to do that now, but we've got to be certainly mindful that it did find resistance there the first time. So we would probably expect that it will find some resistance there again. It's treated any form of resistance that we've seen in the history with pretty much contempt, as you can see here. It tested it, and it spent a week, it spent more than a week. I mean, this is a weekly chart. So it spent several months here at this zone here, and it did the same a little bit here. We spent about a month here trying to break through this zone at around the 98 to 100, but when it did break through, it blasted through. So realistically, it's had a very, obviously a very big move. We would be looking for reversals at this point here. I'm not looking for it to break. I'm probably looking for it to do a series of lower highs and lower lows. Again, although it looks hard to trade on a weekly and a daily, you go to a 1 hour and it's very easy to trade. You can see the pullbacks are very clear, very neat, and basically going up in extraordinarily ordinary fashion. So realistic, orderly fashion, I should say, not ordinary. It's been good. This is a trader's dream. So yeah, the euro is the one you're obviously trading here, right? So the euro has been coming down absolutely at the rate of knots. We see a 4 here, a 104, just a tick under 105. Even this has even surprised me. Look, I knew it was weak, and we've been talking about the weakness in the euro for ages, so it should be no surprise to anybody that we're down here. Probably the extent that it's come down is probably the surprise to me. I thought 1.6 would probably top it out a little bit, but this just continues to absolutely sell off. And you can see all of the key levels that have been broken have been absolutely smashed. So when it does eventually go through, and we did say, you remember last week I said if it breaks the 107.80, 106 is almost a formality. And like I said, I'm surprised that it actually went through it so quickly. So, that being said, we know that the dollar index, which is very correlated inversely to this one, is very, very close to strong resistance. So I would probably expect a little bit of a reversal around this point, maybe a pullback up to the 20 moving average. But, in order for this to turn around and start going along, boy, it's got some work to do. A daily a high, low sequence will be the minimum that we would require here to actually start looking at longing opportunities. And even then, we'd only be aiming for these key zones like the 107 and 108 and 109 anyway. So realistically, I'd be looking at scalping opportunities up to the 20 moving average. So back to sort of that 107, maybe 106.50. Failing that, if it continues to short, that's not my preferred trade right now, because now it's starting to be, it's looking a little bit dangerous. And the problem with it shorting so quickly is you jump in and you might get a little bit of a move, but then it reverses very, very fast and takes you out, which is not what you want. We want an orderly fashion. And now it's getting to the point where it's not quite as orderly as we would like to trade it properly. So in a perfect world, it will pull up to the 20 moving average, and then we look for shorting opportunities at the roll reversal to basically test the lows again. Once the low has been tested, it's easier to test a second time, and you've got a very clear target to aim for. So that's very, very important that you look at it like that. Okay, so keep an eye on this one. Look for potential long opportunities up to the 20 moving average. A change of trend on a 1 hour is all it will take. Scalping opportunity. You can see we're trying to get above the 20 moving average now. If it does that and we get a series of higher highs and higher lows, we've got a very clear target to aim for, which is around that 107. Okay, you can see how easily this was, easily traded this was. You can see a pullback to the 20, trade. Pull back to the 20, trade. Pull back to the 20, trade. It's just after that last bit, after the 106. When it got to my level at 106, I was pretty happy with all that. After that, it started to get a bit erratic, and even then you can see the sell-off was even more extreme. It becomes a little bit harder to trade, but getting to our level was a very, very smooth transition. So hopefully you're able to take part of that, because it was a pretty easy trade, I thought. Keep an eye on the change of trend on the 1 hour and look for a scalp to the long. Failing that, like I said, be very, very careful of the shorts, even if it breaks lower, because it is now in uncharted territory that hasn't been here for a very, very long time. All right, the last one we'll have a look at is the all-important S&P 500. Mixed sort of session. You can see we had a pretty big rebound, and now we're basically going to end up with a doji type candle. Big sell-off this week. You can see we've had a massive sell-off. That's if we draw a fib on that, let's draw a fib on that move, and I'm pretty sure that we're going to find that it was 61.8 pullback. You can see, like I said, I always go to the bodies. It actually surpassed the 61.8, and you can see then we had the evening star pattern above the 61.8 fib. So a pretty telltale sign that it was weak. Once it got below the 20 moving average, the party was on for the short, and the logical target is very, very easy. That was the previous lows, of course. So it certainly hit that. Look, this is in the dangerous territory now in the sense that, we're just before May. We know we're in the sell in May, go away territory. That's synonymous with a weakening market. Earnings are well and truly underway. Yes, pretty good results really, but I'm not so sure that's going to matter in an inflationary environment with very high interest rates predicted for the next few years. Not when I say very high, I'm talking about steep inclines, right? So obviously it's not going to be silly, but they are going to be relatively steep. And that is going to worry the market, no question about that. So if we get a lower low close, a daily close or a weekly close even below this level here, and that can happen. You may think it couldn't happen in the day, but look at these candles. Basically this week has sold off the best part of 300 points. So it could easily do it, and it could do it in a session. If we get a weekly close below here, we've got the confirmed lightning bolt on the way down, and then we're looking down to probably a 39.50 as the next target. So pretty easy target to go for. But right now, it's got moving averages everywhere in front of it. It's got trouble in front of it. There's no question about that. And we've got a bit of a doji candle closing off the week. So if you're going to trade this one, trade it with caution and keep your short trades fairly short on it as well, because it is a very volatile moving indice at the moment. Very, very important that you isolate your zones, and the zone is of course 41.40, and we can go to the 20, which is about the 44 40 as well. So it's a pretty big range. I mean, you've got a big range to trade and scalp inside, but yeah, before it breaks either of those zones with a daily candle, I'm not interested in going any longer, just basically scalping that middle zone. So I hope everyone's had a great week's trading. We've had some fantastic opportunities. The market did as promised and really kicked in with some good trending moves out of key zones. Hopefully you're able to take advantage of some of those. Have a great weekend, everyone. I look forward to seeing you all next week.